presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compak Asset Management YouTube update for August 20th, 2021. I'm Moe Ansari, President of Compak Asset Management. And don't forget, if you like the daily broadcast that I do every single day, it's a 1-hour broadcast, it will be automatically downloaded to your phone. All you have to do is go to the App Store or the Google app, and you can download, just type in Market Wrap with Moe. Don't put in the .com, and you can get the daily update downloaded to your show, to your phone every single day. Let's start with this week. The biggest story is the Delta variant. How much will it slow down the economy? That's the big question. I think it will create some fluctuation, some volatility, which we saw in the market this week, but the S&P was only down about 0.59% for the week. We gained back some of the losses that we had midweek. You can see that the infection rates are starting to go back up. We hit nearly 150,000 daily infections this week, but we are starting to drop back. I believe that it's going to go very similar to what we saw in the UK, where we saw a spike in the Delta variant infections, but it started to come down fairly quickly also. I believe that as more and more people are getting vaccinated, more and more people unfortunately are getting the virus, we are going to get to herd immunity one way or the other. It's just a matter of time, and we are getting there. The only sad part that we're seeing is that younger children now are getting infected with the virus. Unfortunately, they don't have bad outcomes with the younger children, but some of them unfortunately do. Looking at the study that the University of Oxford did, it showed that 14 days after vaccination, the efficacy of the shot is about 92%. 90 days later, it goes down to 78%. Same thing with the study in Israel that they did of a number of different, they saw that that it went down, COVID declined by 40, effectiveness of the vaccine dropped to about 44%. And this was somewhere around 6 months after the vaccination. That's why I think we'll have to get the Delta variant. This is against the Pfizer. The Moderna, the numbers I've seen, it's about still 76%, somewhere around 7-8 months after the vaccination. So it's still pretty high. But if once we get the booster shots, I think it goes back up to about the 95%, 90 to 95% efficacy. That's somewhere where we are going to get to, but we'll have to learn to live with COVID. It is endemic, not a pandemic. It's something that is going to stay here. Hopefully, we're also going to get therapies that if somebody does get COVID, they can take the medicine and they will be fine. So we're going to gradually get to that place, but it will take time. In the meantime, it is causing some hesitation in the market. We are seeing some slowdown. The other question, big question, is when will the Fed pull back from putting the money into the system, or when will they start tapering their bond buying program? The expectation is that they were going to announce some kind of tapering at the Jackson Hole meeting, which is next week, but I believe they're going to wait until the September announcement to give us an announcement of when they're going to start tapering, which is expected now somewhere in November or December. They're going to start cutting back on the bond buying program. Initially, that's going to cause some, initially the market before tapering is where the market goes, fluctuates a little bit. After tapering, what we saw last time around, the market started to go back up again. What I'm looking for as far as the market is concerned, we could see some volatility, which we're seeing. There has not been a 5% correction in this market since October. Historically, we get 5% pullbacks. I won't call them corrections in the market, but we have not seen one this year. So market is overdue. When are we going to get this pullback? It is very, very hard to judge. That is why I'm recommending that you stay with your portfolio allocations. Make sure you can always do some pruning and planting. That's the way I would call trimming a little bit, putting it back into the market as you see these little jiggles in the market. That's all they are, little pullbacks or whatever you want to call them. So when we get those, because it's very hard to judge, I still anticipate, as long as the corporations are making the profits that they are, which I think they were going to continue, we are going to see some hesitation, and we are starting to see that. We are seeing this plateauing. You've heard me talk about this, that once we get to August and September, we could see that the growth rate that we saw in the economy slow down or plateau. And that's what we're getting. As the kids get back to school, we'll get into a more normal rhythm of life, whatever they may be. It's going to be different than we had pre-COVID. Post-COVID, life is going to change. Apple today announced, and so did Charles Schwab, that they're going to delay people coming back to the office until the beginning of next year. I believe they're going to see some kind of hybrid model where people are going to gradually get back to the offices, but it will not be 5 days. Maybe it'll be 3 days, 4 days, some people in, some people rotating, and we're going to see some hybrid model that's going to come out as far as work is concerned. We can see the consumer confidence really plummeted, and that I think is again due to the Delta variant. Once we get past the Delta variant, I think we're going to start seeing that coming back, the confidence coming back up. The market continues to move higher. The blue line is the 50-day moving average, and that is at 43, right around there. We closed today at 44.41. So we did get down below the 20-day moving average. That is the red line. Now we're back above it. 44.80 was the high in the market. And if we do break below this, we could come down all the way down to here, which is about 42.5. And then this is the 4,200. This is another support line. So if we do see some pullback, I think we can. If we do see that, it's going to be an opportunity to buy into this market. If you look at the longer-term chart, where each one of these lines, vertical lines, the green and red lines, is 1 week of trading. Again, we came back, tested right at the 20-week moving average, pulled back from there. But the target was around extension of the wave count was 44.75. We got to 44.80. If we can get above 44.80, then I think we will be heading towards 4,600. Do we get the pullback first and then head there by the end of the year? We'll wait and see. Afghanistan has definitely caused some issues as far as the political capital that the president had. He has lost some of that. Biden has now with the bungling of the withdrawal from Afghanistan. I think that'll make the passage of the infrastructure bills a little bit more difficult. But as I talked to Dr. Blinder today, the former vice chair of the Federal Reserve, on the broadcast today, his reading is that we will get some kind of infrastructure bill, and the other bill, the $3.5 trillion, the social infrastructure, as the Democrats are calling it. But the question is, how much of that will be paid for by tax increases, and how much of it will be paid by deficit spending? That's going to be the mix that we'll have to wait and see. I don't think we get $3.5 trillion. Maybe it comes down to $2 trillion, but that is still a tremendous amount of money. It will be spent over the next 10 years. It's not all coming to the economy immediately. It's not going into people's bank accounts, but it will increase some sort of taxation. And whenever taxes go up, that is a brake on the economy, because it takes profits from corporations and gives it to the government. And whenever companies make less money, the market does not like that. The stock goes down. When the profits go up, like we saw in the last quarter, we saw the market continue to move higher. I still believe that if we do get pullbacks, the market is going to continue to grind higher. Looking at the Nasdaq, it did come and break the 50-day moving average. Now support is around 14,200 and then 13,364. That is the 200-day moving average. Seems like we've completed the fifth wave. Eventual target is about 16,000. We closed today at 14,714 for the Nasdaq today. And looking at the weekly chart for the Nasdaq, again, we got very close. We've got support around 14.2 and 13.2, and those are the weekly numbers where we could see if we break the 14.2, which is the 20-week moving average, then we could come down for a few weeks. But we got close to, this is the dot plot, as I call it, my dot plot, which turns down. Once it turns down, these dots get above the market. Usually we see the markets come down. When it gets, the dots are below the market, we see the market continuing to move higher. We got very close to turning the dots to the downside. We'll have to wait and see if that happens next week. If we do, that will give us 3 or 4 weeks of maybe some fluctuation in the market. That's the way I would look at it. One of the markets that I've been talking about is the Russell Small Cap Index, which is the reopening trade. Small cap usually signifies the reopening trade. We have been going between 2,100 and 2,300, 2,350. That's where we've been since for about 8 months. We came and broke the 20-day moving average, but which is at 21.55. We closed at 21.67 today, so we are back above it. I think this is a place that people have to look at it. If we do get the reopening, once we get past the Delta variant, which I think we will in the next few weeks to the next month or so, once we get that, we'll go back into the reopening trade. So this could be an opportunity to start looking at the reopening trade and start expecting that we are going to get the reopen. That is the caveat, is that we don't get worse. The Delta does not get worse. Again, don't forget to the weekly update. If you want to just click on the subscribe button, whenever I do an update, you will get notified on your phone. That is my update for August the 20th, 2021, the YouTube update. Don't forget to tune in to the daily broadcast on Market Wrap with Mo.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compak Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compak Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors, because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.